FTX has imploded, rumors of Binance on the brink. But another very important piece of the crypto markets could be facing major problems of their own. And if this one goes, the markets would be targeted by regulators in a snap. Who is it, and could they be facing insolvency? We'll find out in about 10 minutes, because it's time for Chico Crypto. Who is this very important crypto company? It's Digital Currency Group DCG, a venture capital company focused on crypto led by Barry Silbert. Digital Currency Group are the owners of Grayscale, the largest regulated crypto product in the United States, who have publicly traded investment trusts for Bitcoin and 13 other altcoins. And looking at their Bitcoin investment trust, things are not looking good. It has crashed from a peak of about $53 down to under $8, a crash and burn of 85%. And there is a big spread or discount on the BTC holdings per share, nearly 50%, the largest in the history of the trust. Well, the pain for DCG started last month when its subsidiary lending platform Genesis halted withdrawals for users. And as we can see, they serve an institutional client base that had 2.8 billion in total active loans as of the end of third quarter of 2022. Publicly traded products, institutional clients. Yeah, if DCG goes down, US regulators are definitely moving in. And the scope and size of their problems? In the billions, as Genesis reached out for an emergency $1 billion loan before they had to halt withdrawals. And they are blocking and refusing to do a proof of reserve on their holdings. Things smell stinky, but another sign they are having some major liquidity issues. Some of their altcoin holdings are likely being sold off. Many of their coins are abnormally down more than the rest of the market. And finally, just a couple days ago, one of DCG's clients, Avado, released this blog post. DCG update statement, and in it they say that Avado Custody has used services from the Digital Currency Group and its subsidiaries to offer off-chain staking services to its clients. DCG is currently experiencing liquidity problems due to the current turbulence in the crypto market. DCG is having major problems. And looking at the Digital Currency website and their portfolio, you can get a grasp of how important they are to the markets. They are major investors in Blockstream, the largest Bitcoin development company, Chainalysis, the largest blockchain analysis firm, Circle, the company behind USDC, Coinbase, the largest American crypto exchange, Etherscan, the largest Ethereum block explorer, Paxos, a very important stablecoin company, Kraken, America's second largest crypto exchange, Ledger, the largest hardware wallet company, Ripple XRP, and even America's largest crypto bank, Silvergate. If DCG goes bankrupt, the contagion would spread far and wide into every nook and cranny of crypto. Although, is this all part of the plan, an industry-wide collapse crafted by the deep state? I covered FTX's ties to the deep state last month, showing FTX's Sam Bankman and his family had ties to Senator Warren, as well as the head of the SEC, Gary Gensler. But let me tell you, it gets even worse with DCG. The DCG team mysteriously removed the team section from their website just a couple months ago. But using Wayback Machine, we can bring it back up. And scrolling down to board members, we can see two very important people on the board and board advisors, Glenn Hutchins and Lawrence Summers. Checking out Open Secrets, we can see Glenn is an avid donor to Democratic political candidates. And if we scroll down, we can see he had a specific hard-on for Hillary Clinton. I wonder why. Well, checking out the Wikipedia on Hutchins, we can see in 1992 he joined the Bill Clinton presidential transition team as a senior advisor, focusing on economic policy, and then spent 2 years serving as a special advisor on economic policy and healthcare policy for Bill during his time as president. And Glenn previously held a very important position. He was on the board of directors for the Fed, specifically the New York Fed, whose job is to protect the dollar at all costs. Glenn isn't the only connection to the deep state. Lawrence Summers is even worse. Checking out this World Bank profile on Lawrence, we can see his connections. It says former Treasury Secretary Lawrence H. Summers is one of America's leading economists. In addition to serving as the 71st Secretary of the Treasury in the Clinton administration, Dr. Summers served as Director of the White House National Economic Council in the Obama administration, as President of Harvard University, and as Chief Economist of the World Bank. Both closely connected to the Clintons. And when you hear Hillary's stance on crypto, you get that these guys are not friends of cryptocurrency.
And then one more area that I hope nation states start paying greater attention to is the rise of cryptocurrency. Because what looks like a very interesting and somewhat exotic effort to literally mine new coins in order to trade with them has the potential for undermining currencies, for undermining the role of the dollar as the reserve currency, for destabilizing nations, perhaps starting with small ones, but going much larger.
Both Lawrence and Hutchins, both Hillary stooges, high up on the DCG ladder? Well, if you didn't know, DCG itself has proven time and time again they don't have Bitcoin and the crypto market's best interests at heart. In 2017, Bitcoin was almost destroyed. We had the Bitcoin scaling wars, which led Bitcoin to fork into many different chains. Bitcoin Cash, Bitcoin SE, Bitcoin ABC, and Bitcoin Gold. The reason for all these splits? People were trying to raise the block size of Bitcoin instead of implementing a scaling solution called SegWit. Guess who started these scaling wars, splitting Bitcoin? Digital Currency Group. In May of 2017, DCG released this blog, Bitcoin Scaling Agreement at Consensus 2017. And it said, we agree to immediately support the following parallel upgrades to the Bitcoin protocol, which will be deployed simultaneously and based on the original SegWit 2MB proposal. Activated segregated witnesses at 80% threshold, signaling at bit 4, and activate a 2 megabyte hard fork within 6 months. And scrolling down, we can see the supporters of this were big corporate companies and mining firms, many Chinese. It was a corporate takeover of Bitcoin. Luckily, the people fought back, and the block size increases were not implemented into Bitcoin Core. The people beat the corpse. But there is more. Going back to DCG's portfolio companies, remember Blockstream is one of them. And if we go to Deal Room to check out the investors, Digital Currency Group was one of their first investors in the first round, meaning they hodl a significant portion of the company, and they have influence over their decisions. Now, Blockstream has been trying to take over BTC development for a long time. July of 2019, I posted this video. Is Bitcoin Core development corrupted from the inside? Who's really in control? Where I showed that Blockstream developers were far and wide across BTC development. But here is a great Reddit thread, master list of evidence regarding Bitcoin's hijacking and takeover by Blockstream, where the poster gives links to the damaging evidence regarding Blockstream's attempted takeovers. I'm not going to go through all of this, I'll leave it in the description so you can get the full picture. Well, my friends, DCG has proven that they want to take over Bitcoin, and if they can't, they will attempt to destroy it. And now, don't you find it suspicious that both FTX and Digital Currency Group had close ties to the Democrats? FTX has already crashed and burned, and DCG is on the brink. Retail got fucked by FTX, and institutional could get screwed by DCG. It's a 1-2 punch that will give regulators everything they need to go after crypto. The fight is on and all go swinging down to the grave. What about you? Cheers, viewers. I'll see you next time.